Something just happened in the last 6 hours that most XRP holders haven't even noticed yet, and it could be the first real sign that the bottom is already behind us. Right now, while Bitcoin is holding steady above $61,000 heading into the July 4th weekend, XRP just surged alongside Ethereum and Dogecoin, climbing as much as 4% in a single session. That alone would be worth a video, but it's what's happening underneath that price move that tells the real story. Because in the last few hours alone, whale activity on XRP has surged across every major exchange, and one specific metric just crossed a level nobody expected to see this fast. Stay with me for the next few minutes, because I'm going to walk you through exactly what triggered this move, why it's different from every other bounce we've seen this year, and what it means for anyone holding XRP going into the second half of 2026. Let's start with the headline number. RLUSD, Ripple's own stablecoin, has now captured 51% of all stablecoin activity on the XRP ledger. Read that again. More than half of every stablecoin transaction happening on this network right now is running through Ripple's own token. That is not a small milestone, that is a takeover. A year ago, RLUSD barely existed as a serious player. Today, it controls the majority of the exact infrastructure it was built to dominate. And this comes on the heels of RLUSD already driving $2.5 billion in settlement volume on the ledger, proof that real institutions are choosing to move real money through this system, not just trading a token for speculation. Now let's talk about the whales, because this is the part serious traders are watching most closely. In the last 24 hours, large XRP wallets have shown a sudden and sharp spike in activity across leading exchanges. When whale wallets move in size like this, it typically means one of two things. Either large holders are positioning ahead of news they expect, or they're reacting to something that already happened behind the scenes before it hit the public feed. Given everything else lining up this week, most analysts lean toward the first explanation, positioning ahead of a catalyst. And here's a detail that ties directly into that theory. Mastercard has already named Ripple a settlement partner inside its new AI-powered payments network, a deal that puts XRP directly into one of the largest payment rails on Earth. This isn't a rumor or a partnership announcement dressed up for headlines. This is one of the two biggest card networks on the planet, choosing Ripple's infrastructure for real settlement flow. When you combine that with RLUSD's stablecoin dominance and today's whale surge, a pattern starts to form. And it's a pattern of accumulation, not panic. Let's zoom out to the price action itself, because context matters here more than ever. XRP is trading right around $1.06 as of today, sitting inside a tight range between $1.04 and $1.07. That might look unremarkable on the surface, but remember where this token was 3 weeks ago. In late June, XRP briefly touched a 19-month low near $1.01. Since then, it has held firm, refused to break down further, and is now showing its first coordinated green candle alongside Bitcoin, Ethereum, and Dogecoin all at once. When the majors move together like this heading into a holiday weekend, it's often driven by improving risk appetite across the entire market, not just isolated XRP news. But XRP is clearly outperforming its peers in the reaction. Now here's where I want you to pay close attention, because this next data point is the one most channels are completely missing right now. Active addresses on the XRP ledger jumped 72% in just 2 weeks. Nearly 5,000 new wallets were created in a single day in late June alone, the strongest growth spike the network has recorded in 3 months. Social sentiment has flipped as well, with bullish comments now outweighing bearish ones by roughly 3.7 to 1, a 3-month high. None of these are price metrics. These are usage metrics. They measure whether people are actually opening wallets, moving funds, and engaging with the network. And right now, every single one of those usage metrics is pointing sharply upward, even while the price chart looked flat for weeks. That disconnect between rising usage and flat price is exactly the kind of setup technical analysts get excited about, because eventually one of the two has to catch up to the other. Either usage stalls to match the quiet price, or the price wakes up to match the surging usage. Given today's 4% move alongside a stablecoin market share milestone and a whale activity spike, it's starting to look like the second scenario may already be underway. Of course, no story about XRP right now is complete without mentioning the Clarity Act, still sitting in the Senate, still the single biggest wild card on the table. The Senate returns from recess on July 13th, with a floor vote on this crypto market structure bill now expected in late July or August. Prediction markets currently price the odds of passage this year at around 42%, which means the outcome is genuinely uncertain, not a done deal in either direction. But here's why today's whale activity matters in that context. If large holders are positioning now, weeks before that Senate vote, it suggests some of the smartest money in this space isn't waiting for confirmation, it's trying to get ahead of it. Let's also address the bear case honestly, because a fair breakdown means showing both sides. Standard Chartered, one of the most bullish banks on XRP historically, already cut its year-end target from $8 down to $2.80 earlier this year, citing macro pressure and delayed Federal Reserve rate cuts. That target still sits well above today's price, but the size of that cut shows genuine institutional caution remains in place. If Bitcoin fails to hold its current levels, or if broader risk appetite reverses heading into next week, XRP could easily give back today's gains and retest that $1 floor again. Nothing about this move is confirmed as a trend reversal yet. It's a single strong session layered on top of improving fundamentals, and one green day does not undo months of downtrend on its own. So here's how I'd frame where things stand right now. The price is finally starting to reflect what the on-chain data has been quietly showing for weeks: rising wallets, rising active addresses, a stablecoin now controlling more than half its own network, a major payments partner in Mastercard, and a sudden spike in whale activity right before a holiday weekend. Layer the Clarity Act on top as the wild card that could still send this thing sharply higher or drag it sideways for months longer, and you have one of the more genuinely interesting setups XRP has offered all year. Keep your eyes on two things over the coming days. Watch whether XRP can hold above $1.06 through the weekend without giving it straight back, and watch the whale wallets, because if large holders keep adding rather than distributing into this strength, that tells you this move has real conviction behind it, rather than just holiday weekend thin volume noise. If you found this breakdown useful, hit subscribe right now, because we track this network daily, and when the whale data or the Senate calendar shifts again, you'll see it here before it's trending anywhere else. Let me know in the comments, do you think this is the start of the real move, or just another bounce before another leg down? I'll see you in the next one.